B, discuss 4 challenges that could be encountered by investment professionals when analyzing private equity investments. So there are some challenges when trying to analyze private equity investments, and we can be able to talk about the valuation approach, because the valuation for private equity investments are numerous. There are like about 6 of them there. We're also talking about the point of exit. The point of exit is also another challenge that can be able to befall private equity investments. We're also saying funding, access to funding is also another way of how you can be able to, or one of the challenges that is experienced by private equity investments there. So B, we can say challenges. Challenges, number 1, private equity have a variety of valuation methods. And which method to use? Which method to use? Which method to use poses a challenge. So we can be able to briefly mention the valuation tools. So we have IRR, we have replacement cost method, we also have real options, we have the venture capital method, venture capital method. We also have real option. Okay, we've already mentioned real option. We have the NPV method. So which method to select from over here poses a different challenge, or poses a challenge to private equity investors or analysts. Number 2, when to exit. Exit poses a challenge, because you're saying that if you have actually invested in private equity, the duration within which you can be able to hold the investment in portfolio of companies is varied. For real estate, probably the minimum exit period is about 10 years. For some investments, such as say investing in other companies, could be even as low as 6 years. So at what point to exit, and after how much has been realized by the portfolio of company, or by the private equity firm from any form of exit. We are saying that the exit routes include an IPO. We also have management buyout. We have secondary sale, and we have liquidation, like that. So you're saying when to exit and which method to use when exiting poses a challenge right there. When to exit and which method to use poses a challenge. When to exit and which method to use poses a challenge to private equity investors and private equity investors and analysts. Like that. Number 3, we are saying we can mention that the availability of funds, like I had already mentioned before, the limited availability of funds poses a challenge. Limited availability of funds poses a challenge to private equity firms. that. Some investments or some portfolio of companies would require hefty investments. Some of them require moderate investments, and others require little investment there. So we're saying that depending on the type of portfolio of company you're considering to invest in, limited availability of funds. If you want to go big, funds poses a challenge. Even if you want to go small, how small is small? Could be the equivalent of maybe 25 billion shillings, like that. That could be something small there. But for other funds, that could be something very substantial there. Number 4, market timing and business risks are a challenge. The market timing, at what point to purchase the portfolio of companies, that is what you're saying is the market timing, and the business risk. Once you've considered investing in the firm, then we're also saying that maybe the firm might either collapse or might undergo, maybe might be run down by mismanagement and maybe corruption or even fraud within the company right there. So that also poses a significant challenge there.